Heya Cryptozens. Tonight's show. U.S. representatives investigate diversity in crypto firms. Voyager to allow cash withdrawals. And Coinbase faces 2 new lawsuits. It's 10 p.m. Pacific time. The date is August 5th, 2022. And welcome back to the Crypto Overnighter. My name is Nikodemus, and I will be your host. The cover model, mascot, and co-host for this podcast is Tex. And together, we're taking a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And keep in mind, nothing in this show should ever be considered financial advice. Representative Maxine Waters, a Democrat out of California, is the chairwoman of the House Financial Services Committee. And she has some questions about the crypto industry. So she and 4 other representatives, Joyce Beatty, Al Green, Bill Foster, and Stephen Lynch, they sent a letter, and this letter went to 20 different crypto firms. They're asking for data on their diversity and inclusion practices. Now, specifically, they're asking the companies to provide information on, quote, how and whether the industry is working toward a more equitable environment for everyone. These companies include Aave, Binance US, Coinbase, Crypto.com, FTX, Kraken, Paxos, Ripple, Tether, and venture capital firms Andreessen Horowitz, Hahn Ventures, and Sequoia Capital. The lawmakers said, quote, there is a concerning lack of publicly available data to effectively evaluate the diversity among America's largest digital assets companies and the investment companies with significant investments in these companies. We believe transparency is a critical first step to achieving racial and gender equity. And I think these companies are going to have a hard time telling Representative Maxine Waters no. The fact is, she's already leading an effort alongside the ranking Republican. They're working to regulate stablecoins. That right there is an immense power. But she's also the chairwoman of one of the most important committees in Congress, if you're into crypto and fintech, that is. So they sent out a tweet announcing the letter, and there's also a sample letter they made available. I presume that means that the letters are all the same, other than the names and the addresses. In this sample letter, they asked for diversity and inclusion data and policies starting in January 2021. And they're asking for the companies to respond by September 2nd. Now, there was a series of investigations from the HFSC in 2020 and 2021. They were centered around this very topic. They were looking at banks and financial institutions. And those investigations concluded, quote, there is still much work to be done to increase diversity and inclusion at major banks and investment firms. And they're not the only ones interested in this subject. A couple of groups have put out reports that would seem to support the legislators' conclusions. Digital Undivided put out a 2020 report. In that report, that they showed Black women and Latina entrepreneurs, they received less than 1% of VC money. Crunchbase, they said that 0.9% of female founders got money from VC funds. Jenny Gual is the co-founder of the metaverse platform High Street. She said, quote, by default, Web3 is very much dominated by men, and we do not see many female-focused brands getting into the space right now. But, similar to the tech industry, more and more women creatives will join the industry with time. At the time of writing, the global crypto market cap is $1.1 trillion, so the rally is holding. It's up 3.43% in 24. The top 5 cryptos by market cap are Bitcoin up 2.77%, Ethereum up 7.35%, Tether, USDC, and Binance Coin up 1.73%. Okay, Voyager customers, mark your calendar, because the crypto exchange has said that they plan to restore access to cash deposits on August 11th. This is the first step in Voyager returning up to $270 million in fiat currency to the rightful customer. On Thursday, Voyager, which is going through bankruptcy proceedings, they got permission from the court. That was with Judge Michael Wiles presiding, They got permission to honor customer dollar withdrawal requests from the Metropolitan Commercial Bank, which, come on, doesn't that sound like a made-up bank name, Metropolitan Commercial? Anyway, Voyager set up a bank account at Metropolitan Commercial just in case something like this happens. Now, Voyager is saying that it could take 5 to 10 days to process return requests, up to $100,000 per request. And remember, you can start filing those requests on August 11th. Voyager said, quote, requests will be processed as quickly as possible, but will require some manual review, including fraud reviews and accounts reconciliation, and timing will depend, in part, upon the individual banks to which customers transfer their cash. Okay, and let's take a minute and stop right there. Let's be clear. This is just about the cash that customers had on Voyager. Not crypto, not stablecoins. Actual cash you had on account with Voyager. That's all they're talking about. If you have like $5,000 of ADA or whatever on Voyager, well, that's part of the remaining funds. That's considered part of the bankruptcy estate. That's going to get divided up by the creditors. So I expect individuals like you and me won't see much out of the proceedings. Now remember, it was just last month, in July, that CEO Steve Ehrlich filed for bankruptcy protection on behalf of Voyager. Three Arrows Capital imploded, and in the broader market downturn and the damage done with 3AC's bad debt, it was just too much. So they filed for bankruptcy. Because Voyager lent 3AC a lot of money, roughly $660 million. But then again, 3AC was into Terra to the tune of $200 million. When that evaporated, combined with the overall decline of the market, 3AC fell and took Voyager with it. And apparently 3AC isn't alone. Galaxy Digital, they reportedly owe Voyager $34.4 million. Genesis Global Capital owes them $17.5 million. Then again, both of them also had exposure to 3AC and to Terra debt, so it's hard to say whether retail customers will ever see any of that money. Back in June, Voyager got a $500 million loan from Alameda Research to cover those Three Arrow Capital losses. 3AC, of course, has been ordered liquidated by a judge in the British Virgin Islands, and so it came to pass that Voyager filed under Chapter 11 on July 5th this year, which maybe didn't even have to happen. Voyager rejected a buyout bid from Alameda and FTX. They said that the deal wasn't value maximizing for its customers. That said, they are still reportedly considering a sale. They're entertaining bids until August 26th. Then there will be a hearing on a potential sale on September 8th. Barring that, Voyager's blog post said it, quote, is pursuing a standalone restructuring process in an effort to maximize the value of crypto on the platform. The global NFT market cap is down 0.08%. Sales volume is also down 3.83% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Bored Apes, followed by CryptoPunks, Moonbirds, Other Deed, and Bored Ape Kennel Club. Now keep in mind, some of these collections have very volatile prices, so do your own research. Coinbase became the target of 2 new separate class action lawsuits on Thursday. Both of these suits allege that the exchange made, quote, false and misleading statements about the nature of their business. They claim that investors are at danger of losing money because of the bankruptcy clause in its SEC filing. They're also including the fact that the SEC is going after Coinbase over allegedly allowing users to trade crypto assets that should have been considered securities. So again, we're seeing further fallout from the Wahi brothers and their buddy Samir. Those guys got caught up in insider trading at Coinbase. Coinbase tells the feds, hey, there's something hinky going on here. The SEC decides to do its own parallel investigation. And the most impactful thing to come out of that investigation is not going to be the guilt or innocence of the defendants. Not really. The most impactful thing is going to be the fact that the SEC just decided to classify 9 tokens as securities completely out of the blue. And so we're going to be hearing about cases like this for some time, I think. So let's take a look at the ones in front of us today. Now, the first one comes from Brager, Agel, and Squire. It was filed in the U.S. District Court of New Jersey. And in this lawsuit, the firm claims they're acting on behalf of, quote, any and all persons who purchased, quote, Coinbase securities. And they've got a time frame in there for purchases between April 14th of last year to July 26th of this year. And they're saying that Coinbase made deceptive claims about their business practices. And the second suit is much similar to the first. It was filed in the U.S. court in Jersey, and the firm is San Diego-based Robbins, Geller, Rudman, and Dowd, LLP. And they're looking for plaintiffs that did business in that same time period. And the suits are kind of cookie cutter in content, at least as far as the wording goes. They use the words knew or recklessly disregarded when they're describing Coinbase's behavior. They feel that Coinbase didn't act on the information that the crypto assets that they're listing should be registered as securities. Now, the other aspect of this is how Coinbase handles client crypto. According to both complaints, Coinbase holds client crypto in escrow at Coinbase. That makes customers vulnerable because that means that crypto is part of the bankruptcy estate. And that means that customers, they would be treated as general unsecured creditors of the company. In the Robbins-Geller filing, they said, quote, the Private Securities Litigation Reform Act of 1995 permits any investor who purchased or acquired Coinbase securities during the class period to seek appointment as the lead plaintiff. The Brager, Agel, and Squire team, they're also looking for potential plaintiffs. They said that they want to hear from people who, quote, purchased or otherwise acquired Coinbase shares and suffered a loss, are a long-term stockholder, have information, would like to learn more about these claims. So again, Coinbase is fighting the SEC's claims that they listed securities on their platform. Their chief legal officer is Paul Grewal. And last month, he pointed out that the SEC has reviewed Coinbase's listing process. According to Grewal, the listing process keeps securities off the platform. And again, it's SEC reviewed, SEC approved. Now, I'm not saying that Coinbase is innocent. Not at all. I'm just saying I don't think the stream of related litigation is likely to slow down at all. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.